Hi students, welcome to our corporate accounting marathon lectures. Okay, first, most important and most exciting news I will tell you is that these marathon class, the topic which I'm going to teach in any of the marathons I take, they are going to be complete and comprehensive from your exam point of view. Okay, so you do not have to worry that okay, it is just like some kind of a crash course and it is being taught a little bit from here and there. No, I have made complete notes of this chapter. We are going to solve big questions in this, okay, which will help us clear all our concepts. So any question asked even in the paper, you will be easily able to attempt that if you follow what I am going to teach here. And we are also going to solve the past exam questions. Okay. Now to begin with, I am starting with a very important chapter, which is consolidation of accounts. Now this chapter has always been very important in corporate accounting paper, okay, because it involves a lot of practical and other theoretical aspects also as per Companies Act 2013. So for both, I will say for practical as well as for theory, this chapter is important. We have to concentrate more on practical questions because this is what they ask us in the past exam trend, and with the experience and what I've been teaching over these many years, I know that what are the type of questions which consolidation of accounts carries in the exams. Okay, so this chapter is good for 15 marks to go. Okay, when we will come to the practice questions and past exam questions, you will come to know, oh, this chapter has always been very important, and we are going to do this in detail with my written notes. So there will be no wasting of time of copying and writing. You have to just sit there and understand. Okay, so we are going to begin now. All right. So consolidation of accounts. What does consolidation mean in just a basic sense? That if there are two companies together doing that business together, okay, you are merging the accounts of two companies and showing under one balance sheet. Okay, that is the basic understanding. But when does this consolidation come into picture? When there are two companies where one is a holding company and one is a subsidiary company. Okay, so as per Companies Act, we all know what is a holding and what is a subsidiary company. A holding company is nothing but the company which holds 50% or more share in another company. That another company will be known as our subsidiary company. Okay, so say company A Limited and B Limited. Okay, A Limited is the owner of shares of B Limited to the extent of 75%. So yes, the relationship is holding. A is the holding company and B is the subsidiary company. Okay. Now for a holding and subsidiary, a holding company has to give standalone statements as per the accounting standards, also as per Company Act 2013, and they have to give a consolidated statement along with their investments in B Limited. Okay, so we are going to understand that how the accounting part is taken care when consolidation comes into the picture. Okay, now basic to start with. If a holding company is buying some shares in the subsidiary company, okay, so definitely holding company is seen something that okay, this company is good to invest, so we will go ahead and we will buy the shares of S company. So holding company is going to pay some kind of a consideration, correct? So that consideration, paid consideration, say if I tell you holding company has offered to pay 120 CR and we calculated the net worth of the subsidiary company which is 100 CR. That means holding is paying 20 CR more over the net worth of subsidiary. So that 20 CR is like a loss for holding company. Okay, when it is a loss for the holding company, we will treat it as if we have paid towards the goodwill of that subsidiary. We had to pay extra because subsidiary company is carrying goodwill in the market. Okay, hence for 100 crore net worth, we paid 120 crores. When I say we, I am talking from the holding company point of view. Almost all the sums in consolidation, we will be thinking from the holding company point of view, so we will not go wrong. Okay. Next is when the holding company buys a subsidiary company and the net worth is 100 crores. However, the holding company has paid only 80 CR. We have paid only 80 crores for the net worth of 100 CR. So our cost of control, the cost of control, which is the most important word, is going to be profit. We paid 80 for a 100 rupees thing. So 20 rupees profit, it will be known as a one-time profit. Okay, it is a capital reserve. One-time capital related profit. So therefore it is a capital reserve. Okay. Now in case of now before I move forward, in case of holding and subsidiary, okay, what we have to understand, I will give you a framework of what has to be done when we are solving the sums. Okay, as I told you, S limited and H limited. I am giving you one example. S limited has say 2000 shares. Okay, total number of shares are 2000. From that, H limited is owning 1500 shares. Correct? So if I tell you what is the percentage holding, you will tell, ma'am, it is 75%. 75% holding of H limited, right? Therefore, what is this 25%? 25% belongs to the minority shareholders. It is known as minority shareholders. The remaining 25% is with some 2-3 other shareholders, and they are known as minority shareholders. We are holding 1500 shares in S limited. Now almost all the sums will revolve around asking us to calculate the cost of control. Okay, we need to know what will be the cost of control, whether it will be in form of a goodwill or whether we have capital reserve. Okay, almost all the sums. And there will be one more question. They will ask you what will be the share of minority interest. Okay, these are the two main questions which almost all the questions, any question you pick up, they will ask you this. Okay, in order to calculate this, one simple thing is, in order to calculate the cost of control and minority interest, I'll show you minority interest later on. But say for cost of control, I just showed you all goodwill and capital reserve. It is basically cost of investment. How much did we pay? What was our purchase consideration? How much did we pay? Okay, say we paid around rupees 20,000 minus the share in the net worth or the net assets of S limited. Okay, how much will be my share? 75%, no? So if I am telling you the net assets total is equal to say 40,000. Okay, so 40,000 into 75%. 40,000 into 75% will give you 30,000. So your share in the assets of S limited is 30,000. You paid only 20. So you got 10,000 as a profit. This will be treated as your capital reserve. This is the basic thing which we will have to do. But what is net assets now? How do we calculate the total of net assets? That is basically our equity share capital. Okay, equity share capital. In that, how much share we will have? 75%. Any pre-reserves. Pre-reserves means what? Any reserves which were there before I became a holding company. Before I took the shares in S Limited, before that whatever pre-reserves are there, for that also I will take 75%. Any kind of pre-P&L, pre-profit and loss account, before my date of acquisition, before or prior to acquisition. Acquisition will be treated as for the net worth calculation. So in that I will take 75%. If there is any pre-loss, I can subtract it to the extent of 75%. Okay, and if there is any revaluation reserve, okay, revaluation reserves are always treated to be a pre-reserve. Why? Because the assets of S Limited were there before I came. So if revaluation has happened of the assets of my subsidiary company, that reserve is also a pre-reserve, to that extent also 75%. So I can take a total of all, and that will be my net asset share. Or I just do the total of all and then do 75%, I will get the share in my net assets. Okay, this you will get more clarity when we will go to the questions. Right now what I want you all to understand is what is the meaning of a cost of control, goodwill or capital reserve. It is the amount holding company has invested or paid as a consideration for acquiring shares in S Limited. Subtract that from the net worth or net assets, the share in the net assets holding company is going to get. Balance everything is going to be of minority interest. Okay, so when I want to calculate minority interest, I will take the balance 25% here. Okay, 25%. Everything at 25%. But there is one more additional thing which we will take it to the minority interest. Otherwise, everything remains the same. Okay. So now how to do the adjustments? I will show you that. What are the adjustments? Working for cost of control and minority interest. Okay. I have already made this notes. So you don't have to copy anything. Okay. You have to just pay attention and listen. So say holding company as per our example is 80% and minority interest is coming to 20%. Obviously balance is minority interest. So particulars of subsidiary company. First, equity share capital. Okay, so for equity share capital is always treated as pre. Anything which is pre, that will be divided between the holding company for cost of control and minority interest in their respective ratio. So COC is nothing but for calculating the cost of control. So equity share capital, holding companies 80%, minority interest 20%. Revaluation reserve is always pre. Since it is pre, divided 80%, 20%, and that will go for your cost of control calculation. General reserve, generally it is always pre. Again divided 80%, 20% and take it in your cost of control calculation. Preliminary expenses, which are a type of a loss, kind of, it is an expense. They are also always pre. Take it to your cost of control calculation 80% and 20%. So in cost of control calculation, remember we take everything which belongs to pre date of acquisition. Okay. P&L, if it is pre, take it to your cost of control 80%, 20%. But if it is post, if it is a post P&L, so here what is important is if anything is post, holding company will get its share. But you cannot take it as a form of cost of control. Simple thing. Why? Because this profit you earned after you became the holding of that subsidiary. So how can you calculate it in the form of net asset? You cannot take that profit in for calculation of your cost of control. That profit is earned by the subsidiary after you have already become its holding. So it is a normal profit. It is treated like a normal profit. You put it in your P&L account. Don't take it in the calculation of cost of control. But minority interest, they will get their post P&L share also. Obviously. Even holding company will get its share. But it will be credited in the normal profit and loss account. Okay. Then if there is any pre-dividend paid. Okay, if it is a pre-dividend and now it is getting paid. Now, how will we come to know whether it is a pre-dividend, post-dividend? We will see which profit it is, whether that profit is pre or whether that profit is post. If it is a pre-profit, we will take it as pre-dividend because in order to pay dividend, we need profits. Okay, some accumulated profits with the company, they have made some profits. Because there are profits, they are giving that profit in form of dividend. Okay, distribution of profits. If they are using any profit which is belonging to the pre-period, I will treat that as a pre-dividend. But if they are using any profits, okay, which belongs to the post-acquisition period, I will treat it as a post-dividend. There is no confusion. If profit is pre, from where dividend is paid, I will treat it as pre-dividend. If profit is post, from where the dividend is paid, I will treat it as a post dividend. So if it is a pre-dividend and it is already been paid, so it is already been paid and it is used from the pre-dividend profit, 80% share holding company, we will take it in the in case of the cost of control calculation. But minority interest will have no effect. They have already got the dividend before only. But if it is a pre-dividend proposed, then 80% and 20% we will divide. Okay, it is proposed, not yet paid. This you will take it in the cost of control calculation and this share minority interest will get. And if it is a post-dividend, simple, you got dividend, it's like an income, put it on the credit side of the P&L. Anything which is post will not go in the calculation of cost of control. Remember this one statement. It will solve all your problems. Okay, so this is the statement. It is like a magical statement. Okay, you are supposed to just go through this and you will be able to solve any sum. We just spoke whether how to decide whether the dividend is a pre-dividend or post-dividend. So we will see the profit from which the dividend is being given. Okay, date of declaring dividend, date of payment dividend, all that is to be ignored. You do not take into consideration payment date and declaration date. You will take the date from which profit is being used. Okay, if date of acquisition they are not giving you only in the sum. You will assume the first day of the financial year, 1st April. Okay. Shareholders items of the subsidiary company, that is the net worth item, or you can say the net assets item. Net assets, this is what we are talking about since when. We will split that between holding and minority interest. Okay, so what are those shareholder items? Share capital plus reserves and surplus minus the fictitious asset like a preliminary expense or some kind of a loss, that will be known as shareholders items. Okay. Now next, concept of mutual owing. Okay, this is one important concept. That is why I have given you all in the form of notes. Now what does this mean? It is saying mutual owing means what? Now since holding company and subsidiary company, okay, we all know that holding has got the shares of S Limited. Okay. It can be possible, no, that before they became holding and subsidiary, they were doing some business together. Okay, they were each other's debtors or creditors. They must be buying some goods from each other. So one could be a debtor, one could be a creditor. That can be possible. Okay, but when they will come together as a consolidated balance sheet, then what will I do of this type of, accounting treatment? So what here we do is, if holding company has to receive any amount from subsidiary company, or holding company has to pay any amount to subsidiary company, we will say this is a mutual owing, and then we will cancel it from the books of the companies. Say H Limited is saying that my debtors are rupees 10,000, and who is that debtor? S. And S Limited is saying that my creditors are rupees 15,000, but from that 10,000 are of H. So don't you think, see this debtors and this is the creditor. So one is the debtor, other is the creditor for another. So this 10,000 I will remove it from the books of accounts. Why? Because it is mutually owing. Will you pay each other or what now? No, right? If there is any mismatch in the mutual owing, then the least of the amount is cancelled. See, here the creditors are 15,000, but only 10,000 are of holding, na? Understood? So I will cancel it with 10,000. Other 5,000 will be some outside creditors, not H Limited. Okay. So this is mutual. We'll do one question also of mutual owing. Now next, if holding company holds some debentures also, equity share capital to is there only, but they are holding debentures also of the subsidiary company, it will be treated now as a mutual owing, because debtor creditor, correct? Debtors, no, debenture holders are creditors, correct? And thus it will be cancelled from both the books of the account. While cancelling this debentures, if there is any profit or loss on cancellation, that profit and loss you put it in the P&L of the holding. Nothing has to be done in cost of control. Okay, in cost of control what we have done, that only will stay. Now how will you cancel? We have done debentures chapter. We always do any capital cancellation, we do at face value. We have to cancel it at face value. So say debentures of subsidiary company, they have given this debentures to holding company. So holding company has now become their creditor, right? Debenture holder. Face value is 70, but in the market currently these debentures are floating at 60,000. So if you will cancel it, now, market value is less. You are cancelling it at 70,000 face value. More, no, face value is more. So means it is going to go away 10,000 is kind of saved. Okay, so 10,000 is the profit. Face value is more than the market value. 10,000 profit credited to your P&L account. And when the face value is less than the market value, 10,000 will be your loss. You have to debit it to the profit and loss account. Cancellation. So it will all go in your P&L. Okay. Now sometimes they do not give the dates for the reserves also. So if there is no date given, I will assume that entire reserve is free, and I'll take it for my cost of control calculation. Okay. Then they are saying, if the acquisition is on the first day of the year, say I am telling you, I acquired shares on 1st of April 2018. Then the opening balance of the P&L will always be pre. Okay. And current year's balance, current year, will become post. Okay. So say if I tell you, I started with 1st of April 2018. Okay. P&L account had opening balance of rupees 10,000 on 1st of April 2018. On 31st of March closing, at the time of closing, the P&L balance was 30,000. That means currently in this current year, between April and March, we made a profit of how much? 20,000. This is known as current year's profit. Only then the balance can become 30, no? You had 10. You are closing at 30. That means current year you earned 20,000. This current year profit is treated as a post profit. Okay, this is treated as a pre-profit. This will go in my cost of control calculation. Okay, post profit also holding company will get its share, but it will go in their P&L account directly. It has nothing to do with my cost of control. Okay, if the acquisition is on the last day of the year, 31st March, then the entire reserve will be pre, completely. That entire 30,000 will be my pre-reserve. Okay, so now we are going to solve a little bit of practical questions, all right, so that we get a better understanding, right? Come on. Consolidation of accounts. So I have like kind of curated this notes and designed this notes based on whatever is given in your module, all your guideline answers. Okay, then certain other past exam questions, but we can use them still. Why? Because they give us more practice. So I have kind of combined everything together, because if you all know, previously this subject, okay, was an MCQ OMR based. So even those questions, but they were proper solving questions, though they were in MCQ form, but we had to solve it in order to arrive to the answers. So I found certain questions really interesting, important. They can ask you this in form of solving also now. So I have taken that and I have kind of designed these notes. Okay. So now the first question, the balance sheet of H Limited and S Limited as on 31st of March 2012 is given to us. Okay, H Limited, S Limited. Share capital, authorized, issued, subscribed and paid up capital. In that first, equity shares of rupees 100 each fully called up and paid. So 6 lakhs rupees and 2 lakh rupees. Okay. 6 lakhs and 2 lakhs. Okay, so it is going to be 6,000 shares here and here it is going to be 2,000 shares, right? In reserves and surplus, P&L 80,000, 80,000 both. Current liabilities, only trade payables are there, 75,000 and 48,000. In non-current assets, we have fixed assets, 5,55,000 of H and 2,48,000 of S Limited. Long-term investment, shares in S Limited at cost, rupees 2 lakhs. Find the cost of control. Okay, long term, you will always find in H Limited, you will find the shares investment in S Limited in asset side. Obviously, for H it is an asset, no, it is an investments are assets. So they have given me long term investment shares in S Limited 2 lakhs. Now if you see, 2 lakhs here is the total amount of share capital of S, and holding is also having 2 lakhs. That means this is a wholly owned subsidiary. All the shares of S Limited are owned by the S Limited. So it is a wholly owned subsidiary. Now how to find the cost of control for this? Nothing. It's very easy. In fact, it is more simple than any other sums. If there is a wholly owned subsidiary, that is the holding company is holding the entire equity share capital of subsidiary, then the investment of holding company in the subsidiary company is subtracted with the help of calculating net assets of subsidiary company. So if you want to find cost of control, whether it is goodwill or capital reserve, you first find the total of net assets of subsidiary company. Okay. Now net assets of the subsidiary company, how I will get? Either I will say, okay, 2,48,000. Net assets means assets minus outside liabilities. Net assets is nothing but assets minus outside liabilities. That will give you your net assets. Okay, so here you have net assets, in that you have only one amount, 2,48,000. Outside liability is only 48,000. Creditors, trade payables. So 2,48,000 minus 48,000, your net assets will now become 2 lakhs. Investment is also paid at rupees 2 lakhs cost they have given me. It is at cost. So there is no profit, there is no loss, there is no difference at all. So there is no goodwill, there is no capital reserve accordingly. If yes, if net assets would have been more, then what is the investment paid? Then it would have been capital reserve. Same thing like how I have taught you all before. Okay. Otherwise, it would have been goodwill. But there is nothing over here. And net asset calculation is so simple. This type of questions has lot of probability of which can be asked. You all are supposed to know this concept. Okay. That is why I have taken one question just for solving purpose. Come on. Now question number 2. Following is the balance sheet of H Limited and S Limited as on 31st of March 2007. Share capital 100 rupees share each. Okay, so 5,000 shares here, 2,000 shares of S. General reserve, they have given me the date opening. See, 1st April. 1 lakh, 6 lakh, 60,000. Profit and loss account, no date is given. 1 lakh 40 of H, 90 of S. Bills payable, nothing is there in H. S Limited has. Creditors 80, 50 total. In assets, we have goodwill 40,000, 30,000. Other fixed assets 3 lakh 60, 2 lakh 20. 1,500 shares in S Limited at cost. So this is the cost. H Limited has paid this much for them. This is the cost of the investment. 2 lakh 40. Stock and debtors is there. Cash at bank total. Okay, this is the total. Okay, this is the total. What are they given us? The P&L of S Limited showed a balance of 50,000 on 1st April. That means this is opening. We have to find the cost of control and minority interest. Super. Whenever I have to find the cost of control and minority interest, I have to treat the shareholder items, right? Of which company? S Limited. Why? Because I am acquiring shares in S. So I need to know the net worth of S. In order to know the net worth of S, I will see the shareholder items of S Limited. Which are those shareholder items? Equity share capital we have. We have general reserve. We have P&L. Okay. Then in preliminary also, there is nothing like that. Preliminary expenses or any other loss. That is it. Okay. So we are going to treat these 3 items. Okay. Whatever is pre will go in cost of control. If it is post, it will not go. Okay. So let's calculate. Come on. Answers. Date of acquisition is not given. So I am assuming it to be on the 1st of April 2006. Okay. Because the date of the balance sheet is given as 31st March 2007. And here details are also given of 1st April 2006. So I will assume date of acquisition as 1st April 2006. Next, subsidiary company, number of shares 2000, 2 lakhs divide by 100. 100 is the face value. So we have 2000 shares. From there, they are saying holding company is holding 1500 shares. So what is the holding percentage? 75% and 25%. Balance 25 will be of minority interest. Now I will start treating the shareholder items. First will be equity share capital. Equity share capital is always pre. 2 lakhs is subsidiary company's equity share capital. Divide that holding and minority. So cost of control, I am going to take 1 lakh 50. Minority interest 50,000. General reserve is always pre, I have told you. Unless anything else given. But here to see they have given the date also. General reserve 1st April 2006. 60,000 pre. Divide that between the holding and minority 75% and 25%. Minority interest share we will take it in minority. And holding company share which is 45,000 we will take it for cost of control calculation. Now P&L of S Limited. They have told me when on opening 1st of April 2006 opening was 50,000. They have told me in the question last that opening balance of P&L was 50,000, but in the balance sheet as on 31st March, if you see it is showing 90,000 here. right? So how will I treat this? 1st of April I started at 50,000. This is going to be always pre, because it is 1st of April. So I'll split it, holding company, minority interest. So this I'm going to take in the cost of control, 50,000 into 75%, 37,500. Balance will be minority interest share. This 37,500 will go in my cost of control. Okay. But on 31st of March 2007, the balance sheet is showing balance of 90,000. That means in the current year we earned a profit of 40,000. This 40,000 profit will be treated as a post profit. Holding company will get its share, 40 into 75%, 30,000. And minority interest also will get its share. But this will not be taken in the calculation of cost of control. This will directly go in the P&L account of H Limited, because it is a post profit. It's a normal profit earned by the holding company. But minority interest share will be taken into consideration. So for minority interest, I will take this pre also and I'll take this post also. So total will be 12,500 plus 10,000. Okay, 12,500 plus 10,000. This will be my minority interest share in pre and post P&L. Pre and post P&L. Okay, so cost of control, investments paid minus share in the net assets. Okay, what was my share in the net asset? Investment, so I will get directly from the balance sheet. Here they have given me 2,40,000 is my cost of investment. Minus share in the net assets of shareholder items. Equity share capital we calculated, minus it. General reserve minus P&L pre, minus it. Okay, so when you will subtract 2,40,000 everything, so this is a positive number. When you will subtract, you will get 7,500 as goodwill. Okay, and minority interest, you will add all the items. You will add shareholders item here. This is minority interest. 50,000 plus share in the general reserve, 15,000 plus 22,500. All you will add together, 12,500 plus 10,000. See, I have written separately. This is pre P&L. This is post P&L. Okay, this is general reserve. This is the equity share capital. So total will be 87,500 for minority interest. Clear, everybody? Now I am going to move to the next question, which is number 3. So this will be the type of sums which they are going to ask. Okay, we'll take a little more complex question now. Balance sheet of X Limited as on 31st of March 2005. We have 12,000 shares of 10 each, 1,20,000. General reserve, P&L, trade creditors. In assets, we have premises, plant and machinery. Shares in the subsidiary company at cost. How many shares we have? 2,000 shares of 10 each, but we have paid 25,000. Stock, trade debtors and bank balance. Balance sheet of Y Limited. We have 3,000 shares. General reserve as on 1st of April 2004. This is. Okay, 1st of April 2004. P&L, trade creditors, property, plant at cost, stock, trade debtors, bank balance. At the date of acquisition of X Limited, of its holding of 2,000 shares in Y Limited. That means X Limited is the holding company, Y Limited is the subsidiary company. The latter company means Y Limited, had a credit of rupees 6,000 in its P&L account. That means on the date of acquisition, P&L account of subsidiary company showed rupees 6,000. That means it is an opening balance. Find the cost of control and minority interest. Okay, so date of acquisition, I am assuming it to be on the 1st of April 2004. Balance sheets are given as on 31st of March 2005. So 1st of April 2004 is my date of acquisition. Holding company and subsidiary company. I know that subsidiary company Y Limited has got total 3000 shares. Okay, and X Limited is holding 2000 shares of that 3000. So I can calculate the entire ratio. 2000 divided by 3000, 2/3, 1/3, right? Instead of doing 66.67%, do 2/3, 1/3, it will become more simple. I have to calculate cost of control. For cost of control, I need my cost of investment, which is already there here, 25,000, minus the share in the net worth, net assets. What are net assets? Shareholder items. So which are the shareholder items which I have to treat? I will treat equity share capital, general reserve and P&L. Only these three. There is no preliminary expense, nothing. Okay, and for minority interest also I will treat the same shareholder items. Okay, so equity share capital total is 30,000 of Y. I will divide that between holding and minority. So holding company, cost of control 20,000. General reserve, they have told me that on 1st of April, okay, had a credit of 6,000 in the P&L account. No, sorry. General reserve is 6,000 only in the balance sheet as on 1st of April. So it is pre. They have given me the date also. So 6,000, 2/3, 1/3. Cost of control of holding will be 4,000. P&L of Y Limited, if you see in the balance sheet 31st March 2005, it is 9,000, but they opened at 6,000. So same thing I will do again. Opening 6 on 1st April, closing on 9,000. This 6,000 is a pre-P&L. Share of holding company, which is 4,000 out of that 6, 2/3, will go in my cost of control calculation, and minority interest shareholders will get their share. But how did I reach this 9,000? Because I made a profit in the current year of 3,000. This 3,000 is a post profit. Holding company will get its share, 2/3 share, but it will go in its P&L. So this will not be taken in the cost of control. So what all I have in my cost of control? Equity share capital 20,000. Then I have my general reserve, okay, which is 4,000, and share in the P&L, which is again 4,000. That I am going to take it in my cost of control. So investment cost is 25,000, which is given already in the balance sheet. Okay, investment paid minus share in the net assets or shareholder items, minus 20,000 equity share capital, general reserve share and P&L share. We get a profit. Okay, cost is 25,000, but we are getting 28,000 share in the net assets. So 3,000 capital reserve, and balance all is minority interest. So here in equity share capital, okay, 1,000 minority, 10,000 will be minority interest, 1/3 of the share capital. General reserve also, it will be 1/3 of 6,000 minority interest will get. In P&L, pre-P&L also they will get the money 2,000, and they will get the post P&L also 1,000, 1/3 share. For minority interest, I will take both pre and post acquisition profit, okay, of P&L account. P&L generally they will give you like this, always, almost, because profit and loss account is that type of account which has an opening balance. Then in the current year we earn some profit, and therefore the closing changes. Okay, so for cost of control we will take only pre for holding, but for minority interest we will take both pre P&L as well as post P&L, pre acquisition, post acquisition. Okay, so in that case, minority interest, you see, this is your equity share capital, this is your general reserve, this is your pre-P&L and this is your post-P&L. So total is going to be 15,000. Okay. So cost of control is in form of capital reserve and minority interest is 15,000. Okay. Now I am moving to the next question. So we are done with question number 3. Now coming to question number 4, again same thing. Find the amount of cost of control and minority interest, Vipul Limited and Vedika Limited. Equity shares of rupees 10 each fully paid up, 10 lakh rupees, 2 lakh rupees. Okay, that means 20,000 shares and 1 lakh shares. General reserve, P&L, 1 lakh 50, 40, creditors and then total. In assets we have fixed assets and 70% shares of Vedika Limited. That means Vipul is the holding company. Okay, Vipul is holding. This is the subsidiary company. So we have 70% stake. The cost of investment is 1 lakh 40. Current asset, discount on issue of shares, fictitious asset. It is a shareholder item, 5,000. Okay. Now on 31st of December 2011, Vipul Limited acquired shares in Vedika Limited. On 1st of April 2011, Vedika Limited P&L showed a debit balance of 8,000. Now dates are important. 1st of April 2011. They are talking about their P&L account. It showed a debit balance of 8,000. That means it was a loss. They are closing the balance sheets on 31st of March 2012. And Vipul has come on 31st of December 2011. Okay, this all dates are very important. On 31st of March 2012, Vedika Limited decided to revaluate its fixed assets at rupees 2 lakhs. Find the amount of cost of control and minority interest. So Vedika Limited fixed assets were 1 lakh 80. Okay, on 1st April 2000 and on 31st of March 2012, right? But they decided to revalue it and put it as 2 lakhs rupees. Okay. So if I am putting it as 2 lakhs, that means 20,000 will be my revaluation reserve. Revaluation reserve. Revaluation reserve is also a shareholder's item. It is always treated to be pre. Though it was being done at the end of the year, but it will be treated as pre. Why? Because it is of the assets which were already existing before Vipul came into picture, right? So now, the date of acquisition 31st of December. Holding company share, they have already told me it is 70% and minority interest will now become 30%. So I will start treating the shareholders items over here. First is equity share capital. Then we have general reserve is not there only. P&L account is there. Okay. And there is one fictitious asset of rupees 5,000 and there is a revaluation reserve. There are 4 things I am going to do. Okay. So first starting with equity share capital of S Limited. It is 2 lakhs. Okay. Subsidiary company 2 lakhs, 70%, 30%. So in the holding company's cost of control 1 lakh 40 will be going in order to calculate. Okay, and minority interest balance 30% will be 60,000. 2 lakhs into 30%. Revaluation reserve is always pre. We are going to revalue the assets at rupees 2 lakhs. This is given. This is currently standing in the balance sheet. Therefore, how much is the increase in the asset value? 20,000. So it becomes like a reserve, revaluation of assets reserve. Holding company will take it. It will go in its cost of control calculation. 70% of 20,000, 14,000. And minority interest is going to get its share 30%, which is 6,000. Discount on issue of shares, it is like a fictitious asset. That is also a shareholder's item. It's like a loss. So like how profit there is a share, loss also they have to take the share. It is always pre, discount on issue of shares. Okay, fictitious assets are always pre. So 5,000 I will divide between holding and minority. 30% of 5,000, minority interest will get 1,500. But we are going to debit it, okay, less it. We are not going to add. And in holding company 70%, we are going to take care of this 3,500 debit. It's a loss, no? So you will debit. Now P&L of subsidiary company. There was a debit balance of 8,000 on 1st of April. But what happened when they closed the books? It was 40,000. See, at the time of closing the books, there is 40,000 credit balance in P&L of S. Okay, so when they started with -8, in order to have positive 40,000, it will be what? 40,000. How do we find current year's profit? Closing minus opening. So 40,000 minus and minus becomes plus 8,000. So it will become 48,000 current year's profit. This is going to be current year profit. Okay, now pay attention. Now this particular 8,000 which is pre, it is my loss. Okay, so this 8,000 pre is my loss. This 48,000 in my current year's profit, but my date of acquisition is falling on 31st of December. That means 9 months is pre and only 3 months will be post. It is not on the last date, no. I have not come on the first date also. I have not come on the last date also. If I would have come, date of acquisition was 1st of April, this entire profit 48 I would have treated as a post profit. But since holding company has come in between 31st of December 2011, therefore this current year profit also now has to get divided between pre and post. Right, so 48,000 for 9 months it was a pre profit, and for 12 months it is for 3 months it is a post profit. Okay, so 48,000 divided by 12 into 9, it's going to be 36,000 pre, right? So this 36,000 pre profit and this 8,000 of the loss, that I can kind of adjust is 36,000 profit minus 8,000 loss. So actually only 28,000 is the profit pre one. That I will now divide between holding and minority, and that will go under cost of control at 70%, and minority interest will get 30% of that 28,000. Okay, 36,000 minus 8,000 of the loss. Okay, once again I am repeating. Since Vipul Limited, the holding company, has come in between of the year. Okay, my year starts 1st April, has come, and Vipul Limited has come on 31st of December. So the entire profit of the current year cannot be treated as post. Even that has to be divided as per the timeline. So timeline says pre is 9 months, post is 3 months. So how did I get this 48,000? When I begin with loss of 8, but I am standing at a profit of 40,000. How I got that closing balance of 40? I must have been able to write off the loss also, no, of this 8. And then 40 was remaining. That means I earned a profit of 48,000. 8,000 loss is removed, and now I am standing at 40,000. How we find closing? Current year's profit is nothing but closing minus opening balance. My closing balance is 40 and my opening balance is minus 8,000. So minus and minus will become plus. Therefore current year's profit is 48. That will have to be divided between pre and post. 36 and 12,000. Now this 36 we will adjust with the loss of 8,000. 28,000 will be my pre-profit. Holding company share 70%. Okay, so if you do 28,000 into 70%, 19,600 will go in cost of control, balance minority interest share. And the post profit, which is 12,000, that also holding company will get its share. Okay, but that share is going to be in the P&L account. Take it and put it in your profit and loss statement. You have to not do anything in the cost of control. Minority interest share will be 3,600 here. So 3600 and 8400 total. 3600 plus 8400 will be total minority interest share, pre-acquisition profit, post-acquisition profit. So cost of control, again same thing, cost of investment paid, this is given. Equity share capital, share we did at 70%. PNL, okay, pre-PNL. Revaluation reserve is also pre, we have done the working note. And discount on issue of shares, that has to be debited. So now since everything you are minusing, this you will add. Okay, this we will add. Discount on issue of shares, it is like a debit. See, I will give you one example. In the books of H Limited, no? In the books of H Limited, we make various accounts, okay, when this consolidation takes place. So say investment account. Investment is an asset. So to balance brought down. How much is our investment cost? 1,42,000. Okay. Now, what I got by the net asset method? Equity share capital. Then I got by P&L account. Then I got by revaluation reserve. Okay. All this amount I got. Equity share capital 1,40,000, 19,600 and 14,000. Okay. So 1,40,000, 19,600 and 14,000, right? That is all. Okay. So all this is my income, no? This is all my assets I'm going to get. Shareholders items, my share in the shareholder items. So these are all like profits. So it's on the credit side. So loss will be on the debit side. Discount on shares. What is my percentage? 3,500, no? 3,500. Okay, so investment account is done. Initially they used to ask, in my time, to prepare all these ledgers and then prepare a consolidated balance sheet. Now they have curbed it down and they ask you only minority interest and cost of control. Okay, so now if I'll total 1,40,000 plus 19,600 plus 114,000. So it is going to come as 1 lakh. This total is 1,73,600. Okay, minus 1,42,000 minus 3,500. Okay, 1,73,600. The credit side is greater. Okay, that means you are getting more share. Your credit side is more than your debit side. Okay, so here it will be 2. Capital reserve 28,100. See, capital reserve 28,100. You have paid less, 1,40,000, but you have received more share. And minority interest, you will add everything. Equity share capital. Okay, 1 second. Okay, equity share capital, share in equity share capital. Then share in your P&L pre. Then it is discount on issue. You will remove it. It's subtracted because it is a loss. Okay, then no, this was what? This is your revaluation reserve. Revaluation reserve. Then this will be your pre-acquisition P&L and this is your post P&L. So all together total is 76,500. Okay, 76,500 of minority interest. Okay, so this is it with your questions. Okay, now I want to begin with some past exam questions, interesting questions. All right, so let us start. I will first do the past exam questions and then we will come to some other more practice questions. All right, so now see this. Same thing again. Find, calculate cost of control, minority interest, same thing. Okay. The summarized balance sheet of H Limited and S Limited as on 31st of March 2003 is given below. Equity share capital of rupees 10 each. This is 1 CR, 20 lakhs. So 2 lakh share and 10 lakh shares. Reserves 16 lakhs, 6 lakhs. PNL 12 lakhs, 8 lakhs total. In assets, they have sundry assets 1 crore and 34 lakhs of S. Equity in S Limited 1,60,000 shares. Amount paid is 28 lakhs. 1,60,000 shares into 10 each, 16 lakhs, no? But amount paid is 28 lakhs total is given. S Limited had reserves of 6 lakhs when H Limited acquired shares in S Limited. That means reserves opening balance is given. PNL balance was fully earned after the purchase of shares by H Limited. So it is a post profit, post PNL. Okay. S Limited then decided to issue bonus shares out of the post acquisition profit in the ratio of 1 share for every 5 shares held. Calculate the cost of control before the bonus shares and after the issue of the bonus shares. What will be the journal entry passed in the books of S Limited and H Limited on issue of bonus shares by S Limited? Why S Limited can give bonus, no? If S Limited will give bonus, even H Limited is the shareholder, even they will get the bonus. Okay, but we will first do cost of control before the bonus shares and then I'll explain you what is bonus shares. Okay, how to calculate that. Now given, easy. Given H Limited is holding how many shares? 1,60,000 shares. 1,60,000 shares in S Limited. Out of how many shares? 2 lakh shares. So what is my percentage of holding? 16 upon 20, 80%. Therefore, minority interest is going to be 20%. Now, for calculation of cost of control before the bonus shares are issued. Okay. What is my formula? Amount of investment paid minus the share in the assets, in the shareholder item, net assets. Okay. So, amount of consideration paid is 28 lakhs. This is given. What are my shareholder items? Equity share capital. First, equity share capital, we have reserves, we have PNL. Okay, these are my shareholder items which I have to take care. So, equity share capital minus equity share capital as the face value. Okay, so how many equity share capital? It is going to be 80% of the 20 lakhs. So, 16 lakhs, 80%. Then share of H Limited in general reserve. Now, if you see this reserves of rupees 6 lakhs closing over here, see this reserves of 6 lakhs. Okay, it was at the time H Limited acquired shares in S Limited. That means this is the pre-reserve. So, pre-reserve also I will take 6 lakhs into 80%. Pre share of the holding company, 6 lakhs into 80%. It is going to be 4,80,000. Only two shareholder items. Why? Because for PNL they are telling me this entire PNL is after the purchase of shares by H Limited. So then this has become post. Any item which is post has nothing to do in cost of control calculation. So only two shareholder items, equity share capital and general reserve. Done. Amount of investment consideration paid is already given 28 lakhs. Subtract 16 lakhs, subtract 4 lakh 80, 7 lakh 20,000 is the cost of control. It is goodwill. Okay, we have paid much more than what we are receiving as a share in the shareholders items. Okay. Now, calculation of cost of control after the issue of bonus shares. Okay, now for bonus shares, first we will find how much bonus we are going to get. S Limited is giving us bonus. Okay, what is the ratio? You are going to get one bonus share for every 5 shares held. How many shares does H Limited? How many shares we have? We have 1,60,000. So, how many bonus shares we are going to get? We are going to get 1,60,000 divided by 5. 32,000. No, for 5 shares, if you are having 5, you will get one bonus. H Limited has 1,60,000 shares. Cross multiply. 1,60,000 shares divided by 5. 32,000 shares I will get as bonus shares of rupees 10 each. So rupees 3,20,000. So now more simple, amount of consideration paid is already given. Same thing, equity share capital in the H Limited at 80%, this is already there, 16 lakhs. Share in the general reserve, we already did 80%, 4,80,000. Only now bonus, we have a share in the bonus also, 3,20,000, that also we will subtract. Share in the bonus, so even that we will subtract, 3,20,000 exactly. So now my cost of control or goodwill is going to be 4 lakh rupees. Journal entries for bonus, there will be only journal entry in S Limited books. There will never be any journal entry of bonus in H Limited. H Limited is getting the bonus shares, he is the shareholder. Okay, company giving the bonus will pass the journal entry, no? So they are going to pass P&L account debit. How they are giving the bonus? They are capitalizing the profits. So from P&L account 4 lakhs, how many total bonus shares? 40,000 of rupees 10 each. Total number of shares which S Limited has is 2 lakh shares. They are going to give bonus to all, not only to H. Okay. So the ratio is 5:1, cross multiplying. 2 lakh shares divided by 5. 40,000 shares will be given as bonus at rupees 10 each. From where you will give it? From P&L account. Debit 4 lakhs to equity share capital 4 lakhs. 40,000 into 10 rupees. Okay, there will be no journal entry in the books of H Limited. So simple. See, exam question. Easy. Question number 1 is done for past exam. Okay. And this is your like latest exam question. Literally like now, last attempt. Okay. Now next. Balance sheet of S Limited is only given. Equity share capital of 10 each. General reserve, P&L creditors, fixed assets, current assets. Holding company bought 48,000 shares in the subsidiary S. Consideration price paid is rupees 9 lakhs. General reserve as on the date of acquisition is 1,20,000 and P&L on the date of acquisition is 24,000. Minority interest and goodwill we have to find. And how will goodwill be treated in the books of accounts? Okay. So, number of shares, total number of shares of S. One share is of 10 each, so 60,000 shares. From that, holding company is holding 48,000. So, percentage holding 80% and 20% minority interest. Okay, so first I am calculating 20% of minority interest share. Equity share capital, all these are the shareholder items. No, 1, 2 and 3. Only 3 items are there. So, equity share capital 6 lakhs into 20%. Okay, 6 lakhs into 20%, 1,20,000. Okay, then share in the general reserve. What is the share in the general reserve? As on the date of acquisition was 1,20,000 and closing is 1,50,000. Okay, so see here. Working note for general reserve. Okay, date is assumed to be the first date of the year, 1st of April, whatever. Now, general reserve, they have told me as on the date of acquisition was 1,20,000, but when I am seeing the books, it is closing at 1,50,000. That means 1,20,000 is pre. Pre I will divide between holding and minority. So, holding company's 80% will be 9,600 and minority interest 20% will be 24,000 rupees. 1,20,000 into 20%. Current year, they must have earned 30,000 and put it in the general reserve, na? Because it is standing at 1,50,000. So 30,000 is post. Post, anything which is post, I am not going to take them for the consideration of cost of control. Okay, for calculation of goodwill or anything. I am going to consider only the pre. So this I am going to consider. But for minority interest, both pre and post is important. So post 30,000 into 20%, 6,000 will be for minority interest. So 24,000 plus 6,000 general reserve. share in the general reserve of minority interest. This is working note. Total 30,000. Similarly, I will do share in P&L of the minority interest. Okay. For P&L, they have told me opening was 24 and closing is 1,05,000. Okay. So when I opened at 24, this 24,000 is going to be pre 80%. I will take it under the calculation of cost of control. Okay, so 24,000 into 80%, 19,200, and balance 20%, 4,800 minority interest. We is going to get it. Closing is 1,05,000. That means in the current year, we earned a profit of 81,000 in current year. That is going to be post. So for holding company, I will not do anything. I don't want to calculate. I don't have to do anything because it will not go in cost of control. But yes, 81,000 into 20%. 16,200 will be my minority interest share. So total it will become 4,800 plus 16,200. That is going to be 21,000. Okay, so you see this working note number 1, working note number 2, and you can mention it. So total share will be 1,20,000 plus 30 plus 21, 1,71,000, right? Plus 30 plus 21,000, 1,71,000. Right? Okay. Calculation of goodwill or cost of control. Easy. Amount of consideration paid is given already to us, 9 lakhs. We are going to treat the shareholders item, which I think we have already done: equity share capital, general reserve, and P&L. We are just supposed to take it from the working note. Equity share capital will be 80% of 6 lakhs. Okay, we have already done all this. See, 48,000 shares of rupees 10 each, right, at nominal value. So 4,80,000. General reserve of S Limited, only the pre. I am going to take only the pre, 96,000 here. And P&L also I am going to take only pre, 19,200 here. This one. Only pre I will take for cost of control. So goodwill is 3,04,800. Goodwill is always shown on the asset side of the consolidated balance sheet of holding company. Okay. So this also question is done. Now the next question. Interesting, but it is a little lengthy. But it is a simple one. It's the same thing again and again. Holding company, minority interest, goodwill, capital reserve. It keeps rolling around the same thing, revolving around the same concept. Okay. So if you see in consolidation, they are not really asking you any journal entries or make balance sheet or make the ledgers. They want to know whether you understand the concept of the cost of control, goodwill, minority interest share. That is what is important. Okay. Now on 31st of March 2023, H Limited has 20,000 shares out of total 25,000 shares in S Limited. So total shares S Limited is having 25,000. Holding company is holding 20,000 from that 25. H Limited acquired these shares in S Limited in the following manner. Okay, so not in one go. Slowly they have acquired shares. On 1st April 22 they acquired 25%. Then on 1st of October 22 they acquired 37.5%. Then on 1st of January again 37.5%. Okay. On 31st of March 22, I have got this 31st of March 23. Okay. 31st of March 22 means 1st of April 22. Opening. Balance sheet of S. Closing will become opening. Exhibited equity share capital of rupees 2,50,000. Barabar. Why? Because they have told me 25,000 shares of rupees 10 each, na? And reserve and surplus was 1,25,000. During this year 22-23, net profit earned by the company was 50,000, which was distributed evenly throughout the year. Amount of reserves and surplus on 31st of March 2023 stood at 1,25,000. Correct. What happened is reserves and surplus opening started with 1,25,000. Then in the current year they earned 50,000 profit. Therefore on 31st of March they are closing it at 1,75,000. Ascertain the share of the parent company in profits of S Limited, means in this profit, pre and post profit, as on the date of the acquisition of these shares. Okay, simple. Calculation of H Limited, share of H Limited in the profits of S Limited as on the date of acquisition. They are not asking cost of control. They are not asking minority interest. They are asking you to ascertain the share in the profits. Okay, share of H Limited in the profit of S Limited. There is only one profit here, general reserve. Okay. Given H Limited holds how many? 20,000 shares out of how many shares? 25,000. Therefore, percentage of holding will be total 20 divided by 25 into 100, which is going to be 80%. Total holding. But this 80% of total holding has just not happened in one go. They are coming in slowly in different dates, right? 25%, 37.5 plus 37.5 plus 25. Okay. So this total number of 20,000 shares which they have acquired, total 20,000 shares is been acquired in breakups. Okay, 25%, then 37.5%, and then again 37.5%. Okay, so if you will do 20,000 into 25%, here it will be 5,000 shares. Correct. Then if you will do 20,000 into 37.5%, 7,500 shares over here, and then 7,500 shares here. That is how it made 20,000 total. Correct. Okay. So now on 1st of April 2022, what happened? Amount of reserves and surplus, they have told me it was standing at 1,20,000. You are supposed to read between the lines. When they are saying 31st March 22, that means closing is going to become opening. 1st of April 22, my general reserve balance is 1,25,000. That is pre, no? And H Limited acquired how many shares? 25% out of 20. Total shares acquired by the holding is 20 out of 25%. Total holding percentage is 80%. But this 80% of holding, how they have got? They have got slowly. This 20,000 shares, not in one go they have acquired. This 20,000 shares they have acquired in bits. 25%, 37.5% and 37.5%. Okay. So 1,25,000 pre-reserves I have to treat. What is the number of shares acquired? I told you 25% of 20,000 will be 5,000 shares. So how much percentage of holding out of that 80 do they have as on 1st April now? Holding company will have how much of percentage of holding? 5,000 shares out of total number of shares of S Limited. That is 20% of holding is there now. So even in the reserves, you will get 20%. So H Limited share in the profit as on 1st of April 22 will be 1,25,000 into 20%, rupees 25,000. Simple. Amount, the percentage of holding you have on that day, that much of share you will get from your reserves. Pre-reserve. Next, on 1st of October 22, amount of reserves and surplus on 1st April. 1st April it was 1,25,000. Profit earned during the year was 50,000 spread evenly throughout the year. So from 1st April to 1st October, how much will be the profit? 50,000 into 6 divided by 12. Why? Because it is 6 months. April to September end. April, May, June, July, August and September. 1st October again the holding company has come with taking some shares. So now how much total reserves and surplus I have to treat? 1,25,000, which is actually pre, plus the pre one, 50,000 is for the current year, but pre period is 6 months, 25,000. So this 1,25,000 plus 25,000. So total rupees 1,50,000 I will have to treat it. Okay. How much is the freshly acquired shares by H Limited? 37.5% of 20,000 shares. Okay, we just did no 7,500 that will be. So 7,500 shares. So percentage holding 7,500 divided by total of S 25, that is going to be 30%. So on 1st of October, okay, 2022, holding is going to be 30. I am taking 30 and plus previous 20 was always there, which I acquired on 1st April 22. 20% was there here. Now I acquired more 30%. So my total holding will now be 50%. So my share in the profit also has to be 50%. So what is the total profit? 1,50,000 into 50%. That is going to be rupees 75,000. Okay. Similarly, last on 1st of January, again holding company acquired 37.5% of shares. That means 7,500 shares more. So reserves and surplus amount, this is the pre amount. This was there. Why pre? 1st of April 2022. Then profit was earned 50,000 evenly throughout the year. That means from 1st April till 1st of Jan, 9 months. That will become my pre. So how much will be that profit? 37,500. It will be 50,000 into 9 divided by 12. So now total profit will be 1,25,000 plus 37,500. 1,62,500 I am going to treat that. Okay. So freshly acquired shares on 1st January given 37.5%. Means how many shares? 7,500 shares. Out of total how many? 25,000 shares in S. Okay. So 30% is my new holding. So previously I was holding 20. Then again in October I took 30% stake. And now again 30% stake. See, it became 80% stake. So the share also will be to the extent of 80%. 1,62,500 into 80%. Now it will be 1,30,000 rupees. Okay, so this sum, it carries really huge amount of marks, 8 marks. But if you solve it properly, okay, you kind of understand the question and try to solve it with proper dates and everything, there is nothing they were asking you to just treat one item in this. Okay. Now there is one more question. From the following details, calculate the value of goodwill or capital reserve, whatever will come, means they are trying to tell you to find cost of control and minority interest that will be reflected in the balance sheet as on 31st of March 2023. Summarized balance sheet they have given: share capital of rupees 100 each, 10 lakhs, 4 lakhs. P&L, general reserve, liabilities total. Sundry assets, and they are saying 3,000 shares in S Limited as on 1st of April 2022, rupees 7 lakhs. Okay. Balance sheet of S Limited on 31st of March 22. Okay, that means 1st of April 2022 opening exhibited a profit of 1 lakh rupees and general reserve was 60. So this both are opening balances. And my balance sheet is closing on 31st March 2023. Okay. So H Limited holds how many shares? 3,000 shares out of how many? 4 lakh shares divided by 100. 4,000 shares. So percentage holding is going to be 3,000 divided by 4,000. By now this is something which you are able to calculate easily. Minority interest will be 25%. Calculation of goodwill or capital reserve, whatever. Cost of control. Cost of investment is given 7 lakhs. I have to treat the shareholder items which are pre. Okay, so equity share capital always pre, 4 lakhs into 75%, 3 lakh rupees. Okay, it is 4 lakhs into 75%, 3 lakhs rupees. PNL which is pre, okay, profit which is pre, that I am going to take. Which is that profit 1 lakh, 1 lakh into 75%. Opening will be pre, no? Closing will be post. So 1 lakh into 75% and general reserve also 60,000 into 75%. Okay, so both at 75% I will take it. Opening. Opening is pre, right? And the current year will become post. So I don't have to do anything with the post. Cost of control or goodwill is going to be 2,80,000. Right? For minority interest 25%, both pre and post profit I will need. Correct? So equity share capital of the minority shareholders will be 25% of 4 lakhs. So that is going to be 1 lakh rupees. Share in the pre-PNL. Pre-PNL 1 lakh into 25%, 25,000. 1 lakh into 25%. Share in pre-general reserve 60,000 into 25%. Okay, so add 25, 60%, 60,000 into 25, 15,000. Right? Now we have to do the, I'm doing PNL first. Okay. 1st of April, 31st of March. 1st of April we started at 1 lakh and we are closing at what? 4 lakhs. Okay. So if we are closing at 4 lakhs, that means in the current year we made a profit of 3 lakhs. Only then we can close now. So this current year is always post since I started on 1st of April. So for post profit I have nothing to do in cost of control, but minority interest shareholders will get their share, right? 3 lakhs into 25%. That will be 75,000. And in case of general reserve, what has happened is, general reserve I started opened at 60. But closing happened at nil. Closing is 0. That means in the current year, you must have had a loss of 60,000. Must have written off minus. Okay, so that loss you can write, you have to divide holding company and minority interest. 60,000 into 25%, 15,000 loss. So that you can subtract. What I have done is, I'll tell you. So this is like basically here what I'm showing you is we have done 1 lakh of equity share capital, correct? Then we did 25,000 of pre-general reserve. Then we did pre-PNL. Then we did pre-general reserve of 15,000. Then you can say post PNL is 75,000 and post general reserve was a loss, so minus 15,000. So then you will get the total 1 lakh plus 25,000 plus 15,000 plus 75,000 minus 15,000, that will become 2 lakhs. You can do it this way also, or what I did is, since I knew that the current year's profit is rupees 3 lakhs, okay, and PNL I am writing off a loss of minus 60,000. So from 3 lakhs only I removed 60,000. So basically what I did is 2,40,000 into 25%. Okay, that will give you 60,000 directly. as it is 75,000 plus and minus 15 will give you 60 only, na? So what I did is I removed that general reserve loss from this P&L profit, and I share in post P&L I am writing at as 2 lakh 14 to 25%. So minority interest is going to be 2 lakhs. This is how they have given in the guideline answers. You can also do it the way I have done. Okay. Now there is one more question. See this. What are the requirements of consolidation of a subsidiary which is an LLP or a partnership? So requirements of consolidation of a subsidiary, consolidation of a subsidiary which is LLP or a partnership. So as per company account rules, manner of consolidation of account, it is provided that consolidation of financial statement of a company shall be done in accordance to Schedule 3 of the Company Act and as per the applicable accounting standards. Okay, it is noted that relevant Indian accounting standards 110 consolidated financial statement provides that where an entity has a control over one or more other entities, then that controlling entity has to consolidate all the controlled entities accounts. Okay, so entity includes a company as well as any form of entity. Therefore, even if it is an LLP or partnership firm, you are supposed to consolidate its accounts. Okay, and as per accounting standards 21, the subsidiary of an enterprise is controlled by a parent company is consolidated. And what is the meaning of enterprise? It includes company as well as any enterprise other than the company. Therefore, under accounting standards also, LLPs and partnership firms are required to be consolidated. This was a short note for 5 marks. So if you see, consolidation can be asked in form of theory also. Moreover, you are supposed to concentrate on these type of sums. Theory, once if you have understood, you can obviously write in your own words. Okay. Now there are certain past exam questions, though they were in MCQ form, but they are very important. They can ask you these questions and they will ask you to solve it. Okay. So when you have to solve these sums, they become a descriptive question. Okay. So now if you see, we will just kind of quickly solve these sums. They are very easy actually. Okay. So I have given you the solution. H Limited is a holding company of S Limited. During the year 1819, bills receivable amounted to 4 lakhs. Out of the total bills of 5 lakhs received from S were discounted by H. Understand? Okay. H Limited had received bills receivable from S. How many total? 5. Okay. Total receivable was 5, but out of that 4 was discounted by H. Okay. So H Limited and S Limited. Bills receivable. Okay. Out of the total of 5 lakhs. Of total bills receivable. Okay. S Limited had endorsed to its creditors all the bills received to H Limited amounting to rupees 3 lakhs. At the end of the year, the mutual debtors will be how much? Okay. Now, total bills receivable of H Limited is 5 lakhs. It is given. Okay. It is rupees 5 lakhs. Total bills receivable of H. Out of which 4 lakh they have discounted. So, mutual owing will become how much? 1 lakh. And discounted by H. And S Limited had endorsed to its creditors all the bills which were to be received from H Limited amounting to 3 lakhs. So, S Limited had 3 lakhs and from bills receivable 3 lakhs is removed. So, now this is going to become nil. Okay, so mutual owing is going to be only of rupees 1 lakh. Least of the amount is cancelled. Okay. Now next. 1st April 2019, H Limited purchased 16 lakh equity shares out of 20 lakh. Following information is given: equity share capital 2 CR, general reserve 45 lakhs and P&L statement 32 lakhs. On 1st April 2019, a machine of S was revalued by H 25% above its book value of rupees 12,50,000. The amount of minority interest will be how much? In case of minority interest, you will take its share in all the shareholder items 1, 2, 3 and capital reserve also. How much will be capital reserve? It will be 12,50,000 into 25%. How much will be that? 3,12,500. So you will add all, you will take all and you will just multiply that by the percentage. 16 lakh shares out of 20 lakh shares. What is the percentage holding? 80%. Therefore, minority interest is 20%. To calculate the amount of minority interest, okay, equity share capital 2 crores into 20%, 40 lakhs. General reserve 45 lakhs into 20%, 9 lakhs. PNL 32 lakhs into 20%, 6 lakhs 40,000. And 3,12,500 into 20%. That will give you 62,500. So total is 56 lakhs 2,500. Okay. Quickly, next. Holding of H Limited is 75. Other information is given in lakhs. Share capital, general reserve, PNL, capital reserve. Cost of investment is 162 lakhs. The amount of cost of control will be how much? Very easy. Total, just add this total. 150 plus 25 plus 35 plus 10. Okay, this total is going to be 220. Take 75% of this 220 because the holding is 75%. 165. Okay, so your share in the net assets is 165. You paid how much? 162. So 3 lakhs will be your capital reserve. I've solved this sum. I've solved everything for you. Okay. Next. On 30th of June 2018, 2/3 of the shares of S, 2/3, with the total capital of 48 lakh rupees was acquired by H. Okay. Balance sheet of S showed a debit balance of rupees 24 lakhs as on 1st of January and a credit balance of 14,40,000 on 31st of December 2018. The investment of H in shares of S is 36 lakhs. Calculate the cost of control in this acquisition. Okay, so the year is from 1st of Jan to 31st December. Okay. Percentage holding 2/3 percentage means 75%. Okay. Cost of control will not be nothing but cost of investment minus share in the net assets or shareholder items. Shareholder items. What will be my shareholder items? First, it will be my equity share capital. Total capital is 48 lakhs into 75%. Okay, 32 lakhs. Profit post acquisition minus loss pre acquisition. Okay. Now, okay. Balance sheet of S Limited showed a debit balance of 24 lakhs. Okay. So now, date of acquisition is 30th of June 2018. PNL account on 1st of January showed a debit balance of 24 lakhs. And on 31st December, it closed at 14,40,000. That means in the current year, how much profit they made? Closing minus opening. Closing is 14,40,000. Minus opening minus 24 lakhs. So it is going to become positive 38,40,000. That will be my current year's profit. This current year profit also has a timeline of 6 months. 6 months here, Jan to June, then July to December again 6 months. Therefore, 38,40,000 will be divided in 6 months, 1:1 ratio, 19,20,000, 19,20,000. So this is going to be pre. Okay, this is also going to be a loss 24 lakhs. Okay, pre. I have to 24 lakhs pre. It is a loss, right? Okay, so holding company's share total. Okay, it is a loss, no, of 16 lakhs. So 75%. Okay, that also we will take it for cost of control, and this is a profit. So 75% of pre, we will take it as 12,80,000. So here we are going to solve it and we are going to write it as, okay, profit post acquisition. Okay, it is a pre-profit only, pre-profit. Okay, we cannot take anything which is post. It is a pre-acquisition only, pre-acquisition profit, because this is also pre-acquisition profit. 12,80,000, 75% of the share. Okay, so it is going to be 12,80,000. And loss, okay, pre-acquisition loss is rupees 16 lakhs. Out of 24 lakhs, holding company share is going to be 16 lakhs. Okay, it is going to be 16 lakhs. So that I am going to subtract. So I am going to get profit of 12,80,000 and loss of 16 lakhs, and my equity share capital is 32 lakhs. Okay, so my cost of investments, so now this is going to be 32 lakhs plus 12,80,000 minus 16 lakhs, 28,80,000. This is my share in the shareholders item in the net assets. Cost of investment is given to me, it is 36 lakhs minus 28,80,000. Therefore goodwill is going to be 7,20,000. Okay, next question. The total capital of the subsidiary is rupees 3 lakhs. Out of that, 2,40,000 is given to the holding. What is the amount of minority interest if the percentage of outsider shareholding is 20%? So simple. So 3 lakh into 20%, 60,000 here. Okay, this is just to clear your concepts. What is the amount of unrealized profit to be eliminated if the parent's year-end inventory includes rupees 5,40,000 goods invoiced to it by its 60% owned subsidiary at cost plus 25%? Means what is happening is, subsidiary company is selling goods to the holding company, and holding company has that goods in its stock, in its inventory. Okay, in its stock. They have purchased it, no, from subsidiary. So subsidiary company is selling, holding company is going to purchase. So selling price for subsidiary company is going to be the cost price for the holding company. And how is holding company selling to it? By 60% owned subsidiary, means the holding is 60%, but they are selling the goods at invoice cost plus 25%. Okay, how they are selling it? Cost plus 25% profit. Okay, so that profit is now never going to get realized, because I have got it from my subsidiary only and it is lying in my stock. I am going to sell it. My profit is not going to get realized. Okay, so inventory is of 5,40,000. This is the cost. Inventory is always calculated at cost. Okay, so cost for the holding company and selling price for the subsidiary company, right? How they are selling? They are selling cost plus profit is equal to sales. They are selling at cost plus 25%. Okay, that is selling price will be 125. So for subsidiary company, the selling price is 5,40,000. It is given. How I came to know for subsidiary company it is 5,40,000? Because what is the selling price for the subsidiary? It is the cost price for the holding. So what will be my unrealized profit amount? Cross multiply 5,40,000 into 25 divided by 125. 1,08,000 will be unrealized profit, because now they have become one company, holding and subsidiary. Okay, so I'll remove this profit from my stock also. Then next one is your A Limited paid rupees 9 lakh for 70% of equity in B Limited on 1st April 2019. On this date, B Limited had a share capital of rupees 10 lakhs and retained earning of rupees 5 lakhs. All the assets of liabilities of B are recorded at fair value. A limited interest in B would be how much? A limited interest in B will be 70% of the shareholders' items. 70% of which shareholder items I have? Share capital 10 lakhs plus retained earning of 5 lakhs. So 70% of 15 lakhs. Right? That is all they are asking. They are not asking me cost of control. Cost of control, if they would have asked me, I would have said 9 lakhs minus the interest. Okay, interest in the shareholders' items. How much of share? 70% of 15 lakhs is 1 lakh. No, it is 10 lakh 50,000. Okay, they are asking A Limited's interest in B Limited will be to the extent of 70% of the shareholders' items, which is coming at 10 lakh 50,000. There are only two shareholders' items, equity share capital plus retained earnings. That's all. So I added and I took 70%. Now if they would have told me cost of control, fine. So I would have said cost of investment minus this share in the shareholders' items or share in the net assets. Cost of investments, they have given me 9 lakhs. 10 lakh 50,000. So it will be 1 lakh 50,000 of capital reserve, in case I had to put some addition to the question. Alright. So this is it with your consolidation of accounts. Okay. Now, as I told you that my marathon is going to help you understand the whole concept of the chapter in a comprehensive manner. Okay. So you can just stay assured, revise from here, and you will be able to solve the exam questions like how we just did. Okay. So your concepts are going to become clear. Go ahead, revise from here, and you are done with the chapter, with one complete chapter, which is going to give you good 12 to 15 marks, in your paper. Okay. See you all, everybody. Thank you so much. Bye.